Hi guys, welcome to the new video. I hope you are enjoying the FP&A playlist and I am hoping that you have seen all my videos. If not, request you to please go through it. Just to give you a recall, what we did in our last video or last session, we were creating income statement and I told you how to create a sum product formula, basically to how to bring numbers from trial balance using sum product. The advantages of sum product is that it is very dynamic. If you can see, the numbers that are reflected here are for February and January month. Now if I change it to April, let us say, you can see the numbers will get refreshed based on the period. So that is what, using such kind of formulas will add value to your model. So we did last time till revenue, and I gave you a homework to do it for cost line items. So I'm expecting you have already tried it and have done it. If not, I will quickly give you what I have done. So in case you have not done it, just see this. So I have just used the same formula that I have created for revenue, just dragged it. Nothing I have changed. Okay. So you can see the same formula that I use for revenue. It is being applicable for all my expense line items. Definitely for a formula like net income, gross profit, or an operating income, you will have to use different kind of formulas. For example, for a gross profit, it has to be revenue minus cost of supplies. For an operating income, it has to be gross profit minus operating expenses. For a net profit, it has to be your operating income minus non-operating expenses. So yeah, so this is what I asked you to do, and this is what it looks like. And if I change the month, you can see the numbers will get refreshed. Now we can see March numbers along with the comparative for February because we are doing a month on month analysis. Few tricks and few things that you should always have in mind. Two things you should always keep in mind. And wherein I know that you will commit a mistake while creating this model is variance. So variance logic for revenue line items is different from the logic that we will use for expense line items. Let us assume this example. Okay, variance you can see for revenue from February, the revenue has increased for an outpatient program, and that is why it is a positive variance. If I reduce this revenue from 2400 to 2000, you can see I am showing a unfavorable or a negative variance because my revenue has declined from February to March. So that means my formula is correct. Okay, so let me undo this. Now if I come back to cost, okay, and if I use the similar formula that I have used for revenue, for example, I use the similar formula as let me copy this formula, and you can see I am doing what I have done for revenue. So it is calculating a difference, but from the expense perspective, it is giving us incorrect. You know, for example, my cost has increased from February to March, and it is showing me a variance of 740. Is it a positive variance? Is it a negative variance? The answer is it is a negative variance because if the cost has increased, that means it is a warning signal for my business. Increase of cost is always unfavorable and increase of revenue is always favorable. So there is a relation that you have to keep in mind when you are creating a variance logic. So now if I, change this logic, right? If I just do a reverse of what I did for revenue, you can see now my cost has increased and it is showing me a negative variance, and that is true. So that is what I would want you to keep in mind. Variance logic differs for revenue and expense. So I hope this is clear. This is a very important step for you to keep in mind. Other thing that I want you to keep in mind is sign logic, and this is something I'm telling you from my experiences, wherein I have seen people making mistakes. So let me explain you about sign logic. If you see the trial balance, you know, so for this example, we used an hypothetical example wherein we used dummy numbers. Okay. But in reality, how trial balance looks like is, your assets. There are four components in your trial balance: assets, liabilities, expenses, and income. So in reality, when you will be getting a trial balance, income will always have a negative sign. Okay. Expenses will always have a positive sign. Okay. Assets and liabilities will also have a, you know, different sign. So liabilities will be in negative and assets will be in positive. Okay. So when you are linking your income statement to trial balance, you have to keep this in mind because whenever you are preparing a face, you will always show positive numbers on the face because there is no point, if you show expenses in negative or revenues in negative as per the trial balance, it will look really odd and it will not look user friendly. So you have to keep this in mind since revenue or income line items, in trial balance will be negative. So while you create your sum product or any alternate formula, you will have to, negate this sign logic. For that, in this case, you will have to use minus of some product, minus. And if you use minus of some product, for example, in this example, let us say my income that is coming from my, let us say outpatient program. Let me do it in this way. So in reality, you will be given this kind of a data. Let me highlight this. You will be given this kind of a data. As I have told you, incomes are negative. So now if you go back and we'll see the formula, since I have used a negative sum product, then only it is giving me the right number. Okay. If you can see, now let me also use minus sum product for the, month on month. Now you can see my formula is working fine. And you don't have to do anything for expense because expenses in trial balance is always positive. So you just have to use a normal sum product without a minus sign. So I hope these tricks will help you in getting your income statement model right at one go. In our next video, I will be, taking you through some of the other presentation tricks on how you can present your income statement, how to group the data, how to create a dashboard from an income statement, and that too dynamic linked with your periods. Thank you, and I will see you in your next video.